Do you ask yourself whether you should have a financial advisor? What do? Are they worth the money, or can I do it myself? Let's talk about it. Welcome back, everybody. Andrew Toccaceli coming to you, Senior Vice President at W.A. Smith Financial Group. We are a team of advisors coming to you to provide financial peace of mind and to update you on all things financial. Today, we're going to talk about what a financial advisor does or should be doing. Let's jump right in. All right, first, let's discuss the different types of advisors that you can choose to work with out there. I'm going to break this down simply for you. There's really three types of financial advisors. First, though, think about the term financial advisor as an umbrella term at the end of the day. So we have number one, product salesman. Number two, we have investment advisor representatives, people who help you manage your investments and you pay a fee on that management. And lastly, we have holistic financial planners. These are individuals who are looking more comprehensively, not just the investments. So rule of thumb here is that not all financial advisors are planners, but all holistic financial planners are financial advisors. So there's really one common theme when you think about the different types of advisors that are out there that they do. And what you see most advisors do is help manage investments. So that is looking at your risk profile, maybe looking at your upcoming expenses or future expenses, and really just matching up a portfolio that they may have in their toolbox based on what your risk profile shows. That is the most common theme that 95% of advisors out there that they focus solely on. Now, what we want to discuss here today is what should a financial advisor be doing, the right type of advisor. So a really good advisor, and I'm going to go to that holistic financial planner here, is they focus on 5 very, very important planning items for an individual. And it starts with a foundation. It's retirement income planning. So we want to help you understand your current and future expenses, the best way for you to take Social Security benefits, pension benefits, whatever it may be. Do you take single life or joint life? Do you take a lump sum or an annuity? These are things that you should be looking at with retirement income planning. And then lastly, it's if there's a shortfall based on what you need to spend and those simple retirement benefits that are coming in, how to stretch out your retirement savings so that you can continue to maintain a lifestyle that you're accustomed to. So that is the foundation of a really good plan, and that is what a really good advisor should start with when you work with one. Number two is that big piece that I talked about is investments, right? There's more to the investment side than just picking stocks and bonds. It's really, you have to understand the different types of risks that you have out there as well. That is, you have stock market risk, you have inflation risk throughout your lifetime, and you have what I call sequence of return risk, which is if your advisor is not doing a good job understanding when you may need income, the last thing you want to do is have a couple of bad years in the stock market and also need to draw income off of those dollars. So you have, again, sequence of return is if you need money and your portfolio is going down, that could be a major detriment to your portfolio and your future at that point. Lastly, with the investment side is determining what type of risk capacity that you have. We actually do a couple of videos. We talk about risk capacity here, and what that really means is depending on the amount of assets that you have to set aside for current and future income, whatever is left over after your income is taken care of, those are the dollars that you now have risk capacity. You have more time on your side on those dollars, meaning you can take on a little more risk without, again, hindering your future. So a financial advisor should help you identify not only what your risk profile is, what your risk tolerance is, but they should also tell you how much capacity do you have for risk. Okay. Third is tax planning. So a really good financial advisor or planner should help you not with just tax preparation, but tax planning. Those are two totally separate things. Tax preparation is more reactive. It's going to be looking backwards at what happened the prior year. Tax planning should be happening between your advisor and a CPA or some sort of tax professional as well, to allow you to understand how current and future taxes will impact you, how to maximize, keeping money in your pocket now versus it going to Uncle Sam through retirement, but also as your assets pass on to your beneficiaries at that point, how to really create a tax efficient plan. So tax planning is key. Nobody likes to pay Uncle Sam there. So your advisor and your tax professional should be collaborating at all times, all in the best interest of you. So fourth thing is estate planning. A good advisor should be really guiding you to create a estate plan to make sure that your assets pass on exactly as you wish. Some people like to bounce, they want to bounce the last check. Other individuals want to leave a major legacy to their heirs. No matter what, there are some really simple and key estate planning items that you should have to make sure that you're avoiding probate, that you don't leave a major burden on family members, and to ultimately become a little more tax efficient, as I mentioned. So an advisor will kind of quarterback you through to make sure you have the proper estate plan set up. Finally, and a really a big one here, is health and long-term care solutions. Really break this down into three items here. Number one being you're pre-65 and you are maybe retiring and you need health insurance. There's a separate market for that where you have to review your options. Do you use COBRA through your employer right after you retire? Do you go out on the open market to get insurance? How do those costs tie into your overall retirement plan? Your advisor should help you with that. Next is post-65. That's Medicare. You are now eligible for Medicare. Your advisor, a good advisor planner, should be able to really show you all the different options that are out there for Medicare supplements, making sure that they help you get your Part A, your Part B, your Part D, and again, how those costs and everything ties into your comprehensive plan at that point. Third part of the health side of things is long-term care. You could have the perfect plan and the investments are in place, but if a catastrophic health emergency comes up, your whole plan could go under. So an advisor will show you those risks and how a health catastrophe could hurt your plan, and how to really make sure that doesn't happen. Identify those risks and see if long-term care solutions are right for you. Finally, what does an advisor do? This is the most underrated thing that a really good financial advisor does, and it's manage behavior. It's making sure that you're making decisions on facts and fundamentals versus fear and greed. Those are the two biggest things that cause individuals to sell low and buy high, is fear and greed. So a really good advisor is going to make sure that you're staying disciplined, that you have a fully written, documented plan in place, and that you're sticking to it. And they're gonna stick up for what they believe in, not be an order taker, and make sure that you are on track at all times. All right, so I hope this video helps you understand what exactly a good financial advisor does. It starts with picking the right financial advisor for your situation. If you want to learn more about financial planning, make sure you give us a thumbs up, subscribe to our page, drop a comment below on any additional topics you'd like to learn about, and turn on your notifications so you don't miss the next video. See you next time.